How does making money in crypto mining actually work? And how do you know what the best coin to mine is? Can you use mining as a way to earn passive income? Or how would you go about it if you want to use it to get massively rich? And how does mining profitability actually work in real life? Well, in this video, I'm going to break down the different crypto mining strategies to answer all of those questions and more. So stick around for all of that coming up after a quick word from our sponsor. Coin Mining Central is an online store for ASIC miners, and there's no doubt that right now, ASIC mining profitability has just been going up like crazy in these past few months. And the miners that I'm personally most interested in right now are probably the Goldshell KA-Box Home Casbah miner and the Jasminer X16Q, which I still think is probably the best ASIC miner available for at-home miners like myself. Coin Mining Central are also continuously providing me with exclusive discount codes for you guys, like the code 𝗬𝗑, which gives you $125 off on every miner in your order. I am also very excited to tell you that Coin Mining Central have recently launched a loyalty program that lets you earn points in loads of different ways, like signing up for their newsletter or following them on social media. You also earn points on every order you make with them, and these loyalty points can then be redeemed for massive discounts on your next purchase. Now, on top of this, with Coin Mining Central, worldwide express shipping is always free, and there are never any added payment fees during checkout or anything like that. The listed price is always the total cost you'll pay for the miners. And I did a lot of research before I decided to partner up with Coin Mining Central, and there were two clear things that stood out to me about them. The first one being that as opposed to most other ASIC vendors that are based overseas, Coin Mining Central is registered and run out of England, Europe, which means they have to adhere to the very strict regulations for customer support and personal detail protection that we have over here. And of course, all brand new miners also come with a full manufacturer warranty. The second thing is their pretty much spotless track record of delivering miners to happy customers like you guys for well over 5 years at this point. So please go check them out today. I'll have the discount codes and link for you down in the video description. Alright, nothing in this video is financial advice, and I'm going to start by breaking down the economic aspects of crypto mining to its absolute core so that anyone can understand them. And at the very base level of it all, how it all works is you pay money to buy some sort of hardware for crypto mining, be that just a computer with a good CPU and or GPU, a full GPU mining rig, or even an ASIC miner. That mining equipment then lets you turn electricity into cryptocurrency, and the point of it all, for most people anyway, is that the cryptocurrency you mine with that hardware every day is worth more than the power cost of running it. And that is what we commonly refer to as our mining profitability. How much more the mined crypto is worth over the power cost of running the mining equipment. And the way I like to look at it is that your mining hardware is basically allowing you to buy crypto at a discount, since what you are paying for power is less than the actual crypto you are mining is worth. Now, what many new miners don't realize is that the mining hardware itself is actually an investment too, because if you time it right, you are very likely to be able to resell your mining hardware for significantly more than you bought it for. More on that later. But in other words, you start by making a one-time investment into a physical asset, the mining equipment. That physical asset then allows you to make a continuous investment into a digital asset, which is the crypto you are mining with it. And not only that, but you are also allowed to make that secondary investment at a significant discount since, again, we should be paying less for power than the crypto we receive from mining is worth. But how much crypto will we actually receive? Well, the way that works is actually fairly simple. You see, every crypto that is mineable has a set amount of coins they pay out to miners every single day. And that amount doesn't change no matter how many, or how few, people are mining the coin. This is called the daily coin emission. So, basically, everyone who is mining a specific crypto has to share in that set amount of coins that are paid out every day. And how much you get, in theory, is decided by how much mining performance or hash rate you are providing to the network of that coin. So, what's the deal with mining profitability then? What is that and how does that actually work? Well, there are plenty of websites where you can look up mining profitability for different types of hardware, like hashrate.no and what to mine for GPU mining profitability, or ASIC miner value and mine the ASIC for ASIC mining profitability. And how those websites work is that to start, they have you select what mining equipment you have and what your electricity price is per kilowatt hour. And based on that alone, it now knows how much the equipment will cost to run for you in terms of daily power costs. They then check what coins your selected mining equipment can mine, and then based on the current size of the network and daily emissions for those coin projects, they calculate how much of each of those coins your equipment can mine in a day. This is called your daily coin yield for each of the mineable coins. They then multiply that with the current coin price for each of those coins to see just how much those mineable coins are worth at today's coin price. And that amount in dollars is what's called your daily mining revenue. They then subtract the power cost from that, and that's it. You now have a list of just how profitable every mineable coin is for your equipment at your electric rate. Or in simpler terms, they check how much of each mineable coin your equipment can mine in a day, they check how much each of those amounts are worth in dollars, and then subtract your power cost for running the miner from that amount, and that gives you the daily profitability for each of the coins your equipment can mine. But of course, there's one glaring issue with that calculation. Did you catch it? Well, the problem is that it uses the current coin price when calculating how much the coins you are mining will be worth. And the reason why that is an issue is obviously because, well, you haven't mined the coins yet. So whenever you finally do get the mined coins, they are all but guaranteed to be worth something different from what was stated on those profitability websites, since the coin price no doubt will have changed by then. Now, this isn't a massive issue or anything. Those websites are still doing a great job of giving you a good idea of what coins are worth mining, and more importantly, which ones aren't. You see, the biggest advantage of using these websites is to see what coins are unprofitable for you to mine. So, a coin being unprofitable to mine basically means that at your electric rate, the power cost to mine the coin is higher than the value of the coins you'd get from mining. Or in other words, you'd pay more for the electricity than the coins you're mining are actually worth. And basically what that means is, if you were to just take the money you would have spent on electricity and just flat out buy the crypto with that money instead, you'd actually end up with more coins that way while spending the same amount of money. So as you can see, while these websites can't predict what price you might sell your mined coins for in the future if you mine a profitable coin, they can tell you that as of today, you get more coins by buying instead of mining the unprofitable coins. So it's definitely a great idea to check these websites continuously to make sure you aren't mining coins that are unprofitable for you. But that said, these websites do still contribute to what I think may be the most common misunderstanding that I see from new crypto miners. And that misunderstanding is that your mining profitability is decided on the day you mine the coins, which is completely false. Your actual mining profitability is decided on the day you sell your mined coins, not on the day you mined them. Because really, you haven't made any profit before you actually sell your mined coins. For example, it might say your mining profit for a specific coin is $10 per day at the moment. But if that coin were to double in price before you sell it, those $10 worth of coin from that day are now worth $20, meaning your actual realized mining profit for that day was $20, not $10. Now, that doesn't mean that you should go out and mine unprofitable coins just because you think those coins might go up in price in the future, because you'd still get more of that coin by just buying it instead. But this is the reason for why a lot of people keep mining, even when it looks like mining profitability is absolutely laughably bad. Because even if you're mining, let's say $10 a day and paying $9.90 in power, leaving you with what looks like only 10 cents of profit every day, if you don't sell until your crypto goes up 10 times in value, now all of a sudden you were actually making $100 that day while still only paying $9.90 for power. But of course, the big question then is, how can you know when you should sell your mined coins? So let's talk about that next. And this is where we get into talking about different mining strategies. And there are two main strategies and then some slight variations of those strategies. But these two main ones are that you can either use mining as a form of passive income, or you can use it as a more long-term strategy for building wealth. Starting with the passive income one, it's fairly straightforward. You are mining crypto and selling it on a highly regular basis. At least every month, but probably a lot more often than that. You then use some of the money you got from selling your mining earnings to pay your power bill, and the rest of it you just consider your personal income. And maximizing this approach is fairly simple. In terms of hardware, I'd say you can either go for something that is extremely profitable at the moment, like maybe this 𝗧-𝗦𝗪𝗧3M or gold shell KA box if you want to make a lot of income fast, or you can go for a miner that might not be as profitable at the moment, but is a lot more likely to stay consistently profitable for a very long time, like the 𝗧-𝗦𝗛 X16Q. I'll have all of those miners linked down in the video description, by the way, and I also have some discount codes for them that I'll put down there as well. You could also go for something more flexible, like a GPU mining rig or a farm of CPU mining rigs. I actually have a video that goes more in depth on the pros and cons for different types of mining equipment, and I'll link that at the end of this video. As for what coin you should be mining when maximizing the passive income strategy, it's also very simple, because you should, without a doubt, just be mining whatever is the most profitable coin that your mining equipment can mine. And if possible, if you want to lock in that profitability, you should also sell your mined coins on a daily basis to avoid the risk of the coin price dropping dramatically before you sell and therefore losing out on the profits. Just keep in mind that for smaller farms, selling every day you might lose a significant portion of your revenue just to stuff like transaction fees and exchange costs, so you'll have to find the right balance for selling often enough to not jeopardize your income, but also not losing it all to fees. Now, the second strategy is to use mining as a long-term way of building wealth, and the main approach here is to mine for a long time while steadily building very big bags of coins you believe will grow in price, and selling all of those coins when the time is right and making it out with a massive amount of money. Now, to maximize this strategy, the best thing we can do is to hold exactly every single coin that we mine and not sell anything until the time is right. And the reason I mention this is because there is a somewhat hybrid strategy where you hold most of your mined coins but sell just enough to cover the power cost of your mining farm. And while that definitely is a completely valid strategy as well, it is not optimal, because if you're holding your coins with the conviction that coin prices will increase dramatically in the future, then every dollar's worth of crypto you sell now to pay for power could be worth a lot more in the future. Or in other words, every coin you sell now is future profit you are missing out on. So if we do want to maximize the mine and hold strategy, the best thing we can do is to pay the power bill out of pocket and hold all of our mined coins. Of course, this is riskier, since if you make the wrong decision on what coins you hold and then they crash in price, you could be left with nothing. But more on why that shouldn't need to happen to you a bit later in the video. First, let's talk about the best hardware to get for this strategy. And I'd say the biggest difference here is that hardware diversity might be a lot more important for this strategy. Meaning, instead of going all in on one type of mining rig or one type of ASIC miner, you might want to get a little bit of everything. This is because you optimally want to be able to keep mining profitably for a very long time in order to build your crypto holdings as much as possible. And if we're getting many different types of mining hardware, we are more protected against the risk of the whole farm becoming unprofitable. For example, if you just buy 10 of the same type of ASIC miner and that ASIC miner becomes unprofitable, well, now your whole farm is unprofitable. But if you instead buy 10 completely different ASIC miners, plus a GPU mining rig and some CPU mining rigs, now even if one or a couple of those become unprofitable, at least some of your farm should still stay profitable. I think a good place to start would probably be to start building out a GPU mining rig, a couple of CPU mining rigs, and the first two ASICs I'd probably recommend getting right now is probably the 𝗧-𝗦𝗛 X16Q and actually maybe the Bitmain L7 still. Again, links and discount codes of those will be in the video description. Now, if you're very focused on just one or just a couple of different coins that you want to build your crypto portfolio with, you could set your mining farm to mine specifically those coins. But you can actually maximize this mining strategy by, instead of doing that, checking what the most profitable coin is to mine every day, mine those coins, and then swap those coins into the coins you actually want to hold. That way you will actually accumulate more of the coins you want to hold than if you were to just mine those coins directly. That is, if mining other coins is more profitable than mining those coins, of course. One thing to keep a lookout for though is that depending on where in the world you are, swapping coins could be considered a taxable event, and in that case directly mining the coins you want to hold might be a better idea. All you have to do then is just hold those coins until the right time comes to sell. And if you've done everything right, you could be walking away a very rich person at that point. But when exactly is the right time to sell? Is there a way to know when crypto prices are gonna go up? Well, that's what we're gonna look at next. And the answer is that while we of course can never tell the future, the crypto market has actually been extremely predictable if we look historically. Basically, without a fail, so far the crypto market has worked on a 4-year cycle, where we basically have a 3-year bear market of low coin prices, and then that is followed by a 1-year bull market where prices just go to the moon, after which prices then go down again for another 3-year bear market as the cycle repeats. And one thing to note is that so far, every low period has always been higher than the previous low period, and every high period has always been higher than the previous high period. And if you're wondering what's causing these cycles, well, the closest correlation is the Bitcoin block reward halving, which also happens roughly every 4 years, and so far always have lined up perfectly with these cycles, where the peak of the bull market has happened almost exactly a year and a half after the halving event every single time. And if you're curious, as of me making this video, we are just days away from the next Bitcoin halving, meaning if history were to repeat itself once more, we're gonna be moving into some very high coin prices again within a year or so. Now, we can of course not say for certain that the Bitcoin halving is what triggers the bull market to start. But if we look at this graph I got here, there sure seems to be a very strong correlation, wouldn't you say? And also, when you think about it logically, it kind of would make sense why the halving could be what triggers the bull market. Because with the halving, you're basically cutting the supply of new Bitcoin coming onto the market in half overnight. And with Bitcoin still being the biggest coin by far, and also the coin that a very big portion of all crypto trades are done through, if you significantly lower the supply of that coin, it logically would mean that demand for it would increase dramatically, and higher demand usually means prices go up. So, how can we use this information to our advantage as crypto miners? How can it inform our mining strategy? Well, first of all, if you're mining and holding to build wealth, it should give you a better idea of a rough time frame for when to hold and when to actually sell your coins to realize your portfolio. But there are actually quite a few more insights that we can get from this. Because it's not just coin prices that change during these cycles, but also to a big extent mining profitability and coin yield. You see, as coin prices have gone up dramatically in previous bull markets, mining profitability of course has followed as a result, making most mining hardware extremely profitable during those times. But with mining profitability skyrocketing, a lot of new people start mining, meaning the network hash rate for most coins went up like crazy as well, which yes, did decrease mining profitability somewhat, but for some of us, more importantly, it really lowered coin yield. And with this comes a pretty much agreed upon assumption that during the bull markets, profitability is great, but coin yield is really low. And during the bear market, coin yield is really good, but profitability is really low, bordering on unprofitable during certain periods. So with that, you can make the quick assessment that it's best to mine and hold during the 3 years of the bear market, to then continuously sell your mined coins during the 1-year bull market. And yeah, I can't really argue with that. It's definitely a very effective mining strategy that has worked out really well for the people who have managed to stick to it in the past. And one final thing we can learn from looking at the historical data of previous crypto market cycles is that not only coin prices and mining profitability goes up during the bull markets, but also the price of crypto mining hardware goes up like crazy as well. And yes, that does include second-hand used equipment too. And the reason for this is that when mining looks to be extremely profitable, everybody wants to jump on it and start mining, which means all mining hardware sell out immediately, really limiting the available supply of mining equipment. And with high demand, low supply comes much higher prices. So it is very possible that you could buy mining equipment now, mine on it for a good while, and then not only be able to sell the mined coins after a massive coin price increase, but also be able to sell the actual mining hardware itself for significantly more than you bought it for. And on that note, next I'd recommend you watch this video that goes through the pros and cons for different types of mining hardware, or this video that breaks down the different hardware buying strategies there are in crypto mining. So, I'll see you there. Thanks for watching.